Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Lindsay Corporation quarterly report. Lindsay Corporation maintains a market capitalization of $1 billion, broadly in line with the industry peer group. Lindsay Corporation trades at a lower price-to-earnings ratio of 19 times and a higher price-to-book ratio of 2.61 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 37% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. Lindsay Corporation offers a diverse range of businesses and services through its two main segments, irrigation and infrastructure. The irrigation segment provides various products and services, including center pivot irrigation systems, hose reel travelers, chemical injection systems, flow meters, weather stations, soil moisture sensors, remote monitoring and control systems, repair and replacement parts, global positioning system, GPS technology, variable rate irrigation, wireless irrigation management, machine-to-machine communication solutions, mobile device applications, and industrial Internet of Things (IoT) technology. The infrastructure segment offers a range of road infrastructure products and services, including the road zipper system, which is used for highway reconstruction, paving, and resurfacing. This segment also provides redirective and non-redirective crash cushions, movable barriers to enhance highway safety, specialty barriers, perform tape and road safety accessory products, rail products such as signals and lights, structures, foundations, junction boxes, and signs. Overall, Lindsay Corporation's businesses and services cater to the needs of various industries, including agriculture, construction, and transportation. The Lindsay Corp (LNN) stock price has remained relatively stable over the past year, with no significant changes exceeding 4.07% on the day of major news events. Despite several announcements, including a new $80 million irrigation project in the MENA region and a $150 million share repurchase program, the stock's movement was minimal. The only notable exception was the release of fiscal 2026 first quarter results, which led to a significant increase of 6.83% on January 8, 2026. However, even this event did not have a lasting impact on the stock price, as it returned to its previous levels shortly after. This suggests that investors may be waiting for more substantial developments or changes in the company's performance before reacting to news events. The lack of significant stock price movements, in response to major announcements, raises questions about investor confidence and expectations from Lindsay Corp's future prospects. The primary drivers of revenue growth or decline can be identified through a review of the extracted summaries. On the one hand, there are several factors contributing to revenue decline. In the irrigation segment, point-in-time revenue decreased by 10%, with North America experiencing a 4% drop due to lower unit sales volume and international markets seeing a 15% decrease attributed to lower sales in Brazil and Western Europe. In addition to these declines, contract liabilities also decreased from $18.6 million to $16 million. On the other hand, revenue growth is being driven by several factors. The infrastructure segment saw a significant increase of 16% compared to 2024, with road safety products contributing an additional 17% to this growth. Overtime revenue also increased by 13%, while international markets for irrigation sales and demand for transportation safety products driven by government spending on infrastructure projects, are both experiencing growth. The net income of the company experienced a decline from $17,164 in 2024 to $16,524 in 2025, resulting in a decrease of $639, or 3.7%. This reduction can be attributed to various factors, with one significant reason being the increase in estimated annual effective income tax rate due to changes in earnings mix among foreign operations. The profit margins also underwent some changes during this period. Notably, the gross profit margin saw an improvement from 29.9% in 2024 to 32.3% in 2025. However, the operating income margin experienced a slight decrease from 12.5% in 2024 to 12.6% in 2025. The increase in estimated annual effective income tax rate is identified as the primary reason for the decline in net income. This change in earnings mix among foreign operations had a direct impact on the company's overall profitability, leading to the observed decrease in net income and slight changes in profit margins. The company's financial performance indicates a concerning trend regarding its operating cash flow. Despite generating positive operating cash flow in 2024, the subsequent years have shown a decline. In 2025, the company experienced negative operating cash flow for both the full year and the 3 months ended November 30. Furthermore, the calculation of operating cash flow on page 26 reveals a significant deficit of minus $50.9 million. These multiple instances of negative operating cash flow across different time periods suggest that the company is struggling to generate sufficient cash from its core operations. The company's debt level has undergone some changes over the past few months. Initially, there was a decrease in current debt from $233 on August 31, 2025, to $186 on November 30, 2025. However, when looking at long-term debt, it remained relatively stable at $114.8 million in 2025, with only a slight decrease of $156,000 from the previous year. In terms of interest expenses, there were no significant changes mentioned in the provided pages. However, derivative liabilities related to foreign currency exchange rates and interest rates increased significantly from $156 in 2024 to $12,994 on November 30, 2025. This increase in derivative liabilities may have an indirect impact on the company's overall interest expenses. The company's performance varied across different segments and regions. On the positive side, the infrastructure segment recorded a significant revenue growth of plus 17%, with similar results reported on page 25. The MENA region also performed well, with large project sales generating over $100 million in revenue. However, not all segments and regions fared equally well. The irrigation segment experienced a decline in revenue, with a minus 9% decrease reported on page 21. Furthermore, the domestic market faced lower demand for irrigation equipment due to favorable weather conditions and increased crop production, as noted on page 23. Management is optimistic about the company's outlook, citing several key initiatives that will drive growth. The adoption of new accounting standards is expected to have a minimal impact on results, allowing the company to maintain its focus on strategic investments. A significant share repurchase program has been authorized, demonstrating management's confidence in the company's financial position. Management is prioritizing organic growth and synergistic acquisitions, investing in revenue and earnings growth through increased capital expenditures for modernization and productivity improvements. This investment will enable the company to stay competitive and drive long-term success. Additionally, management expects to increase dividends over time, while maintaining flexibility to adjust planned expenditures in response to economic conditions. Overall, management's strategy is centered on driving growth through strategic investments, while maintaining financial discipline and flexibility. The company is well-positioned for continued success, with a focus on innovation, productivity, and long-term value creation. The company's financial activities have been multifaceted. One notable aspect is its dividend payment history. As per the provided information, the company has indeed paid dividends to its shareholders on multiple occasions. This indicates a commitment to returning value to its investors. In addition to paying dividends, the company has also engaged in share buybacks. This strategy allows the company to reduce its outstanding shares and potentially boost earnings per share for existing shareholders. The fact that the company has bought back shares suggests a focus on optimizing shareholder value through various means. There are concerns about inventory buildup and supply chain disruption that may impact the company's operations. One concern is inventory buildup, which has resulted from favorable weather conditions, leading to higher crop production and increased inventories of crops. Additionally, there are also concerns about supply chain disruptions. The imposition of U.S. tariffs on imports from certain countries has led to a marginal increase in the cost of goods for the company. Furthermore, regional political and economic factors, such as armed conflict and currency fluctuations, can create a challenging environment that may disrupt the supply chain. That concludes the financial summary for Lindsay Corporation. Feel free to comment below, and I will be happy to answer them when possible.